Hi, and welcome to another edition of our weekly market outlook report for Monday, 9th of March. We have just left behind us a volatile trading week and a busy economic data calendar, which kicked off March 2020 trading activity. We are heading into a slightly quieter week ahead of us in relation to economic data releases, which starts with Japanese GDP quarter 4 figures on Monday. On Tuesday, we should be on the lookout for China Consumer Price Index for February and Eurozone GDP quarter 4 data. Going forward, on Wednesday, the main points of interest are reserved for UK manufacturing, industrial, production data, and also GDP January figures. US Consumer Price Index for February, and in the afternoon, crude oil inventories. On Thursday, we should be on the lookout for US jobless claims and ECB interest rate decision and monetary policy statement and press conference. The week will finish on Friday with Michigan consumer sentiment. Now, let's take a look at few markets. This is the intraday 4-hourly price chart for euro dollar, and we can see that the euro dollar spiked higher and broke above that psychologically important 1.10 level that we were talking about in the past, which is now represented by this falling resistance trend line. These were multi-year lows, and we all know now that Federal Reserve came in and cut base interest rate by 50 basis points, and this is the true reflection of US dollar weakness against the euro currency. Going forward, key trading level for us to watch is at 111.50, which is a cluster of these lows and also right in the middle of this consolidation range and the breakout. Bulls appear to be in control above that level, potentially opening the way for a spike higher. So a couple of scenarios, either a pullback from the current lows into 112.50 and a rally, or possibly pullback from the current levels into 111.50 and then a rally. Would further support this bullish breakout, potentially targeting 114, 114.50, possibly even 115.15 resistances over a longer period of time. Alternatively, if we see a pullback, corrective pullback, and the loss, the end of day close below 111 area, and a retest of that level from underneath as a newly found resistance, that would negate the current bullish outlook, potentially opening the way for a deeper corrective move towards 110.50, possibly 110, 109.80. Cable, very similar situation as well. Sterling was under pressure up until that magical level of 129.50. And as soon as we got US dollar weakness, we saw sterling dollar breakout higher above this falling previous resistance trend line, now newly found support, which is pointing to a major key trading zone. It's not one level, but it's a zone of about 30 points. One spot 30, which is a nice round number, and one spot 29.73. So pullbacks from the current levels into that level and a rally from there would appear to be quite bullish, potentially opening the way for an extension to the upside, targeting 131, 131.40, 132, which would indicate the cluster of these previous highs. Breakout above that level, 132.70. Alternatively, if we see a pullback and the end of day close below, basically the loss and end of day close below 129.70, a retest of that level from underneath as a newly found resistance, that would negate this as a bullish breakout, potentially opening the way for a deeper corrective move towards 129, 128.50. Dollar Japanese yen, same story again. This is US dollar weakness and Japanese yen strength. Equity markets volatility, we'll see this in gold as well. Japanese yen is normally perceived to be a safety play, same as gold. So US dollar weakness and Japanese yen strength, we are seeing this corrective pullback, substantial corrective pullback from 112.20 all the way down to 105.30 at the moment. Key trading level going forward is at 107, so rally from the current lows and break above initial resistance at 106 and rally into 107, and a rejection from there would further confirm this bearish scenario. We also have a falling resistance trend line pointing to that level, and a couple of fibs from a shorter period of time. As long as 107 resistance hold, or if we see a gradual move lower and a loss of these current lows and dip below 104.50, that would also be perceived to be bearish, potentially opening the way for a deeper corrective move towards 104, 103, 102. Some longer term analysts are possibly pointing to 100 level as a major level of interest to the downside. Alternatively, if we see a rally and a breakout above 107, retest of that level from above, and a spike higher, then the initial or additional upside resistance is at 108, 108.90, possibly even 110. Gold, we saw a massive rally higher as well. Inability of gold to break through these current swing high at 1690 is projecting it as the initial resistance. Some analysts are starting to talk about this double top. It's too soon to be talking about that. The double top can only be confirmed if we see a corrective move and a loss of the neckline, which will be at 1850 in daily time frame. But going forward, for me at least, key trading level is at 1660. So pullbacks into that level and a rally would further confirm bullishness, or a breakout above these current highs at 1690 would open the way for an extended move higher towards 1700, 1725, 1738, possibly even 1750. Some analysts are looking at 1750 over a longer period of time. Alternatively, if we see a dip lower and loss of 1662, retest of that level from underneath as a newly found resistance would then trigger this rising trend line breakout and possibly the loss of these moving averages. In that case, keep an eye on 1640 support. Breakout below 1640 would open the way for a deeper corrective move towards 1612, possibly even 1600. The key major level of support is at 1580, 1585. Crude oil under pressure. OPEC had a meeting in Vienna which didn't end up that well, and obviously we are seeing a further selling pressure in crude oil. Key trading level going forward is at 43.80. That's the swing low here of this rising wedge before another leg lower. That's also a falling resistance trend line, so I will be paying attention to 43.83, 44 level as a major level of interest to the upside. Rally from these oversold levels into that level and then rejection would further confirm bearishness, potentially opening the way for a deeper corrective to the downside, targeting 41, possibly 40, 39, 38, 14. Some longer term analysts are possibly pointing to weekly and monthly time frame supports at 35 level, or $30 to $35 per barrel. Alternatively, if you see a breakout and retest of 43.80 or 44 from above, retest of that level as a newly found support and a spike higher, then keep an eye on 46, 46.85. Breakout above that level would open the way for the retest of 49, which is the swing high here of this rising wedge, possibly even 50, which is a nice and round number and also psychologically important level for crude oil. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.